This is London with Bitcoin Spike at VIP Trader. We're going to talk about the markets, just discussions. Former hedge fund owner, private, non-SEC, non-financial advice. New York is opening here in just a few moments. And I want to say good morning. We are open in terms of a specific move slightly to the downside on NVDA. Okay, picking up along a green byline on the 3-minute time frame. Tesla looking at an open. Let's get into Tesla. Where are we at? Down again. We filled a gap on Friday. I've got some momentum indicators on as we look at a fire sale technically on Tesla on the open. I will remind you we are on a delay here with YouTube. Okay, that means that if you're relying on anything here, you are guys 8-10 seconds behind at least. And that's just with the natural broadcast ability of YouTube. So it's not intended to trade along with at all, just so that you know that. Looking at some movement down for Tesla, we streamed quite a bit on Friday. It was a great, guys. It was really nice to see the, let's just note this, first of all, on the weekly, we discussed contact with the specific 20 moving average on Tesla. And we have, we see now that Tesla has opened up underneath a challenging position underneath that specific 20 moving average on the weekly. That is a big deal for an open for Tesla. We will discuss Tesla and essentially what has gone on in the last week or so, and some of that news not just immediately forthcoming as you would look at Bloomberg, etc. We'll discuss some of those issues as we look at a potential move further down. Let's talk about the overall strategy. Breach of the specific 20 moving average typically will mean what? That we are prepared for contact with the lower band. Now, Tesla has held together well along the specific 20 moving average, but it's been a major source of contention. Precedingly, we pushed below the 20 moving average. You guys see this on the weekly, and we did actually retraject to the upside. This was a difficult moment. So Tesla has a history of pushing below and riding this 20 moving average within a degree of, within a threshold, but not that it's comfortable to say that we are holding this line. So just be aware of that. As we look at some downside price action, Tesla down 1.87% already. We will back out. Let's take a look at NVIDIA as well, 0.86. To the downside. Let's discuss where we're at on NVIDIA as well. The specific open for the new week is below the 20 moving average. We have some overall concerns. Let's take a look at the NASDAQ if we can. The NASDAQ, and I say good morning to all of our VIP. Let's look at the hourly. The hourly here has picked up on the standard deviation, which is a nice line pickup in terms of NVIDIA. Nice flash trade, making sure that we are slowly engaging in the market this morning. I want you to make sure, and I'm slowing down a little bit because I want to make sure that you understand there is a delay function yet again on YouTube, and that this is, you're going to be behind in terms of trade entry. So I'll slow down a little bit to reinforce that fact this morning. So this is not intended to guide and structure in trades. It's just not, guys. It's going to be a slower play by play as we're going to look at the price action and the specific potential moves with patterns, etc. Looking at a broadening bottom formation on NVIDIA. Now on NVIDIA, we did note, what do we have? We have an opportunity for a lower entry. Absolutely. Before we really get to this threshold, okay, of a specific preceding pivot to the left. Let me turn on my chat and see who all is here. I want to say good morning. Hope you're doing well. Now, NVIDIA to the downside. Last week we got Tesla to the downside, last week rather heavily. And I've decided to put some momentum gauges here for us to just take a look at, because we can lose a momentum gauge in terms of where the market is moving. What are our expectations with the market? For instance, now you'll see just red. I'm going to try this out for a couple of days. It's difficult for me to manage all the technical information and traject it all to you with the limitations of me being able to broadcast one screen. I have 15 screens behind me on a Threadripper system, which is maybe half the additional screens nearly in the room here. So we are really well outfitted. So to the extent that it's a little more difficult to just communicate with you on the specific one screen here. I've added some color coding in here to see if we like that, okay? The top left, just a review, is going to be the 3 minute. The second, and you may want to explore putting your charts together like this, okay? The next time frame over is the 5 minute. Thereafter I put the 15 minute, then the hourly, okay? That's the top row. This is going to be for NVIDIA, for Tesla, for Bitcoin as well. Bitcoin with a nice trajectory up, back, let's just say a nice recovery this morning. But what you'll see is the same on Bitcoin. We have a 3 minute, we have the 15 minute, we have, and I need to put, I didn't redo the time frames on Bitcoin, and I will do that. Let me see, I think the hourly, yes, I swapped the hourly and I tucked the 30 minute down in this specific section here. So this is consistent. Bitcoin I've redone as well. The 3 minute, the 5 minute, the 15, the hourly, the 4 hourly, the 8 hourly, okay, which is going to be irrelevant on your equities. Then I have the daily down here, and then I have the 30 minute. I've just hidden the 30 minute. I can swap the 30 minute with the monthly. Okay, I would recommend that you look at both. Right now, what's occurring with the 30 minute on Bitcoin. We have a candle pushing up and over 20 moving average, and we have a recontact along the specific 20 moving average. Buyers engaged after a move up and over that specific moving average. We see that frequently. Now, in terms of momentum, okay, the specific downward arrow is going to signify some downward momentum on this specific print. We got below the 20 moving average here. The pink line is the 20 moving average. And you'll just see that the specific shorts engaged along that 20 after the flip down below the 20 moving average. What picked up? Shorts on Bitcoin at the 20 moving average. We see this phenomenon frequently, a push below, and bears will attempt to reinforce that specific move to the downside, bam, with an engagement. I want to say good morning to Venus, thank you, and good morning to you as well. Hope everything is going well on your end. I know that it is. Venus, hope you're doing well. Nice to see you this morning. And the specifics here, you'll see, for instance, on the 8 hourly. Just take a look at the 8 hourly. We've seen momentum struggling on the 8 hourly. We've seen it just essentially red, reflected by the price. As we were to look at the lower time frames, the hope here is that we can develop some sort of a visual system within the confines, and it's a good challenge. I like the challenge, within the constraints, rather, of our ability to bring you multiple screens. We are trying to integrate additional important indicators visually somehow to you through this system. We don't want it to be haphazard, but we do want it to be reflective, for instance, of the targets to the downside, of the momentum in the market, as we were to just update here on NVIDIA, specific hit into that lower standard deviation, okay? Actually, rather, and correction, if I said lower standard deviation on the hourly. What have we hit on the hourly? This is our cap line, capital control line. Apologies for that if there was a misstatement. And we'll need to work just a bit with this new setup. We're seeing a shift on the hourly. Let's talk about the green is what? Momentum. So the momentum is trying to pick up on the hourly. We do see a re-hit at our capital control line. That's going to be RSI, stochastic, and MACD. Bottom line, if you're trading with our capital control line, make sure that you are looking at the specific. First of all, look at your signal. If you're a long, then look at the possibility that, the strong possibility, okay, at least highly plausible, that you would recontact the specific RSI, stochastic, and MACD line, this capital control line, for an entry. We know this, okay? We do know this. It's going to take me a minute to acclimate to this new kind of momentum, what do we say, momentum gradient function on our screen. And we'll decide if we like it. We may spend a few days or even, dare I say weeks, but probably a few days as we really come into grips with what we want to accomplish on the visuals here for you as we talk about the market open. You'll see let's take a look at that, and that is actually set to what I wanted to view. We need to view as a good reminder. Let's look at the NASDAQ very quickly. Was up late trying to get these charts looking a little bit stronger in terms of momentum for you. I know you guys are hustling, probably burning the candle at both ends, potentially as well. Please don't burn it too much, guys, as we would look at the difficulty right now on the NASDAQ. What are we looking at? We're looking at a specific descending triangle. What is the potential save? You guys know on the candle wicks, you're going to have a different interpretation slightly of what is going on. And we are in the danger zone. I think you can admit we are in the danger zone with a bit of a catch. The NVDA chart is guys, is nicely set to accompany or complement the specific NASDAQ chart as we see a preceding lower pivot. This is a natural demand level entry here, okay? It's going to be a natural demand expression preceding pivot to the left. We see buyers frequently come in at that preceding pivot to the left. However, we're going to be looking on the lines at a compromise of the specific descending triangle framework in play. And you'll see that we're just flirting with this bull pennant notion. And it's never comfortable when you have a flat bottom support on the macro or micro. Typically, that means the sellers have engaged with a level of prominence to establish and push down through this level of support. And you say, well, why does that mean the sellers are present? Well, the alternative would be the following. If we don't have a flat bottom support, we would have just price action to the upside. We agree? So the culprit being the bulls to an extent have allowed sellers to push back down to a preceding flat bottom support, right? Instead of this nice trajectory to the upside, however you choose to draw this. I would just encourage you to always keep an eye out for the specific flat bottom support. We are consistently looking at them, guys, for a return to function. We had some, I would say, some difficult technicals as we look back at the NVDA chart. NVIDIA has been rebounding very well. NVIDIA has been solid the last couple of days. We note that in terms of volatility. What has been difficult has been Tesla. We've had some difficult Tesla technicals to analyze and put in the context of the fundamentals. We're not always real keen on the fundamentals. We may get a nice upgrade call in the market that has a really strong trajectory, let's say impact to the upside or downside in the form of a new price target to the upside like we had with Morgan Stanley last week. But we also get some inconsistency on some of those calls, right? Some of the players who are known for, let's say Cathie Woods recently has not been on the hot list per se. So to the extent that her liquidation of some Tesla, as the news has reported, would have the negative or positive impact, we can play naysayer with someone who's not performing well in the market or abide by their specific actions as well. And to the extent that we are fundamentally or technically based, ideally we are technically based. The best review that we can do, as we were to look at NVIDIA, was a nice trade on Friday. It was aggressive. We will recall that. I'll go into some of the side charts as we look at some nice volatility on the morning. This would be something we would want to call, right? In terms of participation in the market, about 12 minutes into it, just a little bit slower in terms of today, but about 12 minutes into it, we've seen a nice contact in and below for NVIDIA. What did we have last week? It was an impressive return to a preceding flat bottom support, okay? That was a nice move by NVIDIA in terms of the specific preceding flat bottom support down and through with a bit of a shakeout and overperformance on this descending framework. We saw that on Friday. Volatility is what we're after. Becoming consistent with volatility is challenging for the following reason. When we're looking at a return to function in terms of a preceding level of support and a return or a performance up and above that specific level of preceding support, what is the challenge? That we're dealing with a percentage in the 60s, okay? In terms of that specific percentage probability of recovering, and please listen to this like you have not listened to anything in a while, please. The specific descending triangle framework, a specific quote unquote throwback or pullback to a pattern is in the framework in terms of probability of 60% probability, mid 60s, okay? You're looking at a 62 to 65% probability, okay, based on back testing over the preceding 40 years, okay, of market data. This is not an idea. It's not, well, maybe we should test it and really verify. This is an empirical data fact. That's it. Take it or leave it. Do your own research. Do your own homework on back testing. Let me know if you disagree or agree. In terms of the specific moves back to preceding level of support. What is the percentage that I just stated? 62 to 65%, sometimes a little higher and sometimes a little lower, but you're in that ballpark. Bam, if you're looking at 62% return to preceding support, this is not necessarily, I'm going to say the volatility is what we're looking for, without a doubt. However, the specific percentage probability is a percentage that can burn you, period. I will allow you to play with probabilities in the 60s. Okay, I will allow you to compare those, please, kindly, at a level of involvement in the market. If you're doing 100 rounds or otherwise, the icing on the cake is going to be, in terms of your experience, being able to distinguish and properly manage a specific trade. You tell me if it's otherwise. A specific trade that logs in and clocks in at 72 to 85%, let's say 70 to 85%, versus one that clocks in at like 60, 62%. There is a big difference in the market if you're participating at a 60% probability versus a 70 to 85% probability. It is the difference between night and day many times in the market. You'll see the 62% just chew you up. Okay, so be prepared for that. Just be prepared for that. Is this a typical, as we would call, let's say, volatility? Is this a standard equation for volatility that we would look for? We actually, as you know, we like bell patterns. We like, and hey, Tony, nice to see you. Evening. Good evening down under. Good evening down under. How are you, Tony? Nice to see you. And pleasure to have you here. Tony, you are familiar with, as we're looking at a nice completion here to the upside. Good volatility on NVIDIA for the start. Tesla still struggling along. NVIDIA recouped at 1% to the upside. We'll throw in some discussion on Bitcoin here in a bit, and maybe on a few altcoins. Looks like Sol is kind of outperforming in terms of the specific cryptos. But what we'll say is the ideal pattern, and it's not to say that they are easy. It's not to say that they are just simple and it's just, you know, money hand over fist. That's not the notion here with any type of an expanding volatility situation, but it will drive the point home, and please pay attention. As we look at any type of a potential expanding volatility move here, okay, the 70+% move that we like to focus on that's different than a specific return to our throwback is the specific expanding volatility in the form of descending support, descending resistance that are expanding, okay? Descending support, descending resistance that are diverging or expanding. This pattern beats a throwback move. It just does. And how does it beat it? At least the expectation, I'll tell you, and if you trade a lot of these, you know this, the expectation of returning to resistance. Now, it becomes a profit equation. It becomes a very good exercise for anyone trading these. You got it. Where am I interested on these patterns? Lower along the expanding shelf here or support line of volatility. That is one of the biggest protective functions hereof, is you have a target line for your involvement, correct? You got it. Okay, so to the extent that we are focused not only on that, and it'd be a good discussion, does it make it more, does that make it operate with a better level of probability? It is a more consistently driven in terms of participation, as we're looking at a nice move here. We can argue whether or not this would be a cup and handle on NVIDIA. True, we would argue whether or not it would be a cup and handle. A little bit of a defective cupature with the handle. Let's go ahead and draw our extensions on the map. Here, boom, boom. Okay, there we go. We're at about that 38.2 right now. Where are orders? You know this. We've done this enough. On breakout, while everyone's pointing up, we look at that 50% max probability. You see the cupature and the handle. Really a defective handle and really somewhat of a defective cup, but you see that in process. The point is, as you're trading a specific expanding volatility function, the buyers on support have a target framework, okay? You have a bit better lined out, and this discussion becomes a bit more or less relevant depending upon how well you're structuring in your trades or able to execute your trades. I'll just say that because there are challenges as you're looking below a specific, look at this, below a descending triangle for a recovery move, okay? What your challenge is going to be is, well, I know my max probability is 50%. Sometimes we might go to the 23.6. I guess sometimes we also might go to the 78.6, the 8.6, or the full completion. Sometimes, and here you go, guys, this sometimes can get you. Okay, sometimes on this top level descending triangle, we're going to go, and it's a very slim percentage chance of the time, but as we look at this on NVDA, it's a very slim percentage chance of the time we're going to actually go 2 times the amplitude of this move to the downside, right? And now we like the odds, if we're looking at it, well, it's really like a 20% chance, man, that we're going to go twice the amplitude down. That's like a 10 to 20% chance, really 10% chance on 3 times. Just so you know, there's a 10% chance, we'll take that. We like that, okay? So what does that mean? The bulk of the percentages on a descending triangle are built into that framework from the 50 percentile being the max probability, okay? Then we start to creep into that specific possibility we hit that one full, let's say 100% full completion of the amplitude, the downside at 100%. But then we do have, let's say that 20 to 30% of the time, we're gonna go 2 times that amplitude. So what you're dealing with is still a probability equation. What differs is the following. What differs is you're looking at a 60% chance of even returning 60% chance of even returning to the flat bottom support, okay? This is empirical, guys, it's empirical data. It's not opinion. It's not something maybe you should pay attention to. I tell you, just go read the Encyclopedia of Chart Patterns, Bulkowski's work. What's the problem with that? It's like 1,200 pages, right? So it's a bit of information, but the pages that apply to this, what, you've got 20 pages? If you want to read them, I suggest that everyone have the book and that everyone read this information to back this up. If your interpretation differs than mine, you let me know, okay? As we were to look at it, guys, if your analysis of it, your understanding of it, you let me know. So as we're looking at the differentiation between a blackjack, as we would call it, double bottom, and we want that single pass through. Some of the most exciting moves in the market, you know this. We love descending triangles. We love involving ourselves underneath those descending triangles. But as we look at the differential, okay, just the technical experience and what's required of the traders is Tesla's picking up a little bit. Congrats if you did pick up Tesla. Dragging a bit into the morning, about 22 minutes into the New York Open. What we're going to say is this. Participating along a level of support in an ideal, we're going to say this again, in an ideal expression of volatility as such, we call them bells. Easy for me to say, huh? Bells. Here's Monday morning for you. Happy Monday morning and Monday evening to our VIP in Australia. Hope you're doing well down under. We went to a nice air show this weekend. Joint forces, what's going on? Shout out to all the military, etc. As we would look at the specifics here, you have a line of entry on the expanding volatility, without a doubt. What does that mean? Well, you can argue proficiency in terms of your exact calculated entries at the 50%. You could play the 50% on every descending triangle. And the data over the last 40 years is going to tell you what? Well, I'm going to stick with the 50% because this is the max probability, okay? You're going to have to be okay with getting pushed around and kicked out of the trade. That's it. If you play the max probability every time, cool. If you pour through and you're at the 786, you want another trade. You're at the 86, you want another trade. You're at the 100%, you want another trade. And then you're at the 1.272 or 1.414 or the 1.618 and you want another trade. Unless you're scheduling in and managing futures literally at this point with some additional calculatives we're not even going to cover, guys. But unless you're doing some sort of a scheduled in, right? And we have streams on that information, okay? But you may choose to do something along those lines. Or the solution is, well, let me either play max probability at the 50%. Let it burn me. That's fine. Just burn it to the downside. I'm the kind of guy I want to get in, I want to trade, I want to stop loss and forget about it. I don't need to catch every trade. Throw me something tomorrow. The idea would be this. Throw me a trade tomorrow in line with the max probabilities. If I catch it, great. And if not, guess what? Asset on the screen. You're not going to get my attention. I'm going to find a different asset to trade that's more consistent, providing me more trades within the time frame that I want and acting a bit more reasonably in line with the last 40 years of empirical data, right? So that would be the one option here is, okay, fine, you're not going to participate at the 50%, you're going to push down through to the 10 or 20% possibility. Like I've seen this show before. And I'm not going to play, I didn't buy tickets to the circus. That's it. Now, the buying tickets to the circus. What I'll say is the following. If you are structured into, and it's a challenge while you're going through this pickup routine of max probability at the 50% on a descending triangle, it's a challenge to say, well, we probably want some exposure at the full percentage, because if we can catch this move, it can be a big move, right? As a rebound, boom, and move to the upside. It just can. We know blackjacks, and it just showed us one here. So it's acting a little bit disingenuous of a descending triangle recovery up and out and over. Classic blackjack, double, bottom, single, pass through, boom, right? Now, as we would assess, however, and this is the thing to really comprehend and just level into mentally how you're squared away in the market. When you're operating on an expanding level of volatility, you have one line, period. You have one line. Now, if you are looking for a max probability move pattern, let's say a max probability pattern to start with, it is this pattern, period. You can assess the 1,200 pages encyclopedia of chart patterns. If you come to a different conclusion, you let me know. Okay, we'll have that discussion. I'm serious, please go ahead. Would love to have that differential in terms of our discussion framework. But you have one line here. You have, what's the percentage of getting up and over here? Over 70%. Now, I just want to get to this line of resistance. That's my key focal. On the primary first breakout, what do we see? If you trade a lot of these, what do we see on this specific volatility expression? What's likely to occur here? You can ask the Elliott Wave experts, what's really going on in this zone on the first breakout? What's going on? Well, a lot of times we see a bust back down into this pattern. What's critical at that point? Do we have another descending line of resistance, or have we killed it? Okay, why? Because I'm going to count that in line with our volatility. I'm going to count that in line with our volatility expression to the downside, still on the level of resistance, and to, as we were to look at this in terms of level of support. Now, you can make the same argument. It's like, well, okay, fine, London, I get that. It's a little more advantageous, at least in terms of the probability of return to on this top level of resistance. At some point, I'm going to want to revisit this top line of resistance over 70% of the time, right? Now, the criticism would be, well, what about me entering into the potential for a partial return, right? I'm going to want some exposure at a partial return versus what if I get a 3/4 return or a full return? What if I then breach below this level of support? I'm going to tell you that the profit equation, the exposure equation is going to be what? It's going to be won by this specific pattern here, as opposed to a structured in level of exposure discussion in below this pattern here. For what single reason? For what single reason? That we have a significantly higher percentage probability of returning to this top line of resistance. Okay? There's a higher percentage of returning to this top line resistance than there is of returning to this flat bottom support. Okay? It's still noteworthy here, still worth trade consideration. It's still been heavily analyzed by the top dogs in town that are in any town, guys, in terms of TA, in terms of the return to function here. It's still, we can say empirically established that sounds like it's attractive. It's just riskier. Your risk on a return to a flat bottom support, your risk in terms of a return to a head and shoulders neckline, it just is what? Riskier. Okay? So if something's riskier, I would recommend you take the appropriate, let's just say the appropriate steps that guys, I don't want to run your account per se, right? That's not the idea, and you know that. But I just want you to, as we talk about, because we'll get excited about all these patterns. We'll get excited about all of them. There's no reason not to, right? But as we would discuss them, refer to your understanding in the book. And just by the book, guys, we'll call the book New York Institute of Finance, Bolkowski. This has my attention. Does it have your attention? There we go. This is the specific problem with that cupature and handle would be the notion that we are catching right now at a specific bear flag potential, right? This is on the minds of the trader as we settle in just at that 30-minute mark in the market, okay? For Let's look at the levels in play. Let's look at the completions, the tactics that have worked here. 15-minute, nice hit to the downside. In terms of that specific cross under, we got that. The standard deviation, we got that up and over, hit into the topside band. So 15-minute is noteworthy. As you look at your different in the hourly right now, trying to push up into the specific, up and over that 20 moving average. What I will say is this: understand when you have a top shelf performing pattern on your charts, in your hands. Understand when you have just that creme de la creme, this is a high probability trade, and distinguish that, please, from the other opportunities, quote unquote, to trade. Tesla, trying to hold up and over the 3-minute 20 moving average, right? Looking at this move, what would we see here? About a 1.79% move could be to the upside. Not a bad percentage. As we look at the details here, I really tried to structure back into, and this was the one thing that I got to, as I really looked back at the Tesla move. Could have been fundamental, sure. Could have listened to the Squawk Box or to Kathy. I rarely will listen to Kathy from ARC. I rarely will. It's nothing personal. I think there are, technically speaking, there are better games in town. But as I dug back through that this weekend, and I really looked at Tesla, I was like, God, just didn't return to. And what were we looking at on Tesla? I'll just tell you. What were we looking at? Well, we were looking at, first of all, the gap fill. We can talk about the details. We can discuss everything. But we were looking at just a return. We could have gotten just a return move to preceding neckline. What is this? This is, guys, it's a substandard in terms of the probabilities, back-tested. Okay, look through Bukowski's backtesting. As the information is presented to us, this is a lower probability move than what? Than any type of an expanding volatility function, right? You got it. So what is a crossover? Let's talk about this. What is a crossover percentage move? Well, we got a crossover to the upside, a crossover to the downside. What is that in terms of a percentage move? I've got this backtested and calculated more than anyone would care to need to know, okay? Highly proficiently backtested. But what would this be in terms of a percentage? Let me get to this. Now, if you're looking, let's look at this. Let's assess it. If you're looking at, let's talk about, we can talk about Bitcoin. What are my percentages in terms of crossover, okay, on the 1 minute, 3 minute, 5 minute, if we were to look at 15 minute, etc. We're looking at 60, 66, 65, 64, 69% of the time. That's great. That's just fantastic. What's the difference here? This is based on what? This is based on a completion to 50%. 50% of your target. So the percentage number of times that you cross over the 20 moving average, that you actually achieve 100% of the target, these are going to drop significantly. Oh yes. Now you're at 46%. Now you're at 41%, 40%, 15 minutes, 41%, 30 minute, 42%. The 4 hourly, 43%, the 8 hourly, 42%, the daily, 42%. So as you look at your probabilities, as we discuss all morning long, and as we march through the specific crossover cross-unders, we do see and have seen that the crossover or under on the larger time frames, for instance, on NVDA, have been rock solid. They have paid very, very, very well. Okay? So to the extent that there may be a run on, let's say, on the daily or on the 4 hourly, on the weekly, and just a level of, let's say, accomplishment, I can clean this up just a touch so we can have this quick discussion. But looking at, let me take everything off that's unnecessary. Looking at this fold over under the 20 was beautiful on NVIDIA. Boom, 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 right? Nice achievement of target. We saw it precedingly here. Boom, boom. So this NVIDIA, as we've been discussing, has been expressing to us that yes, there is something to pay attention to that's really, really on a back testing basis. Again, the numbers, don't let the numbers lie to you. But on the whole, if we're to assess the crossovers or unders, well, let's assess the crossover or unders multi-time frame on NVIDIA. Now, if you're talking again about a 60% or a versus a 40%, Now 40 is something we just generally stay away from, right? Within that, and these are based on 100% completions, 41% on the 5 minutes. On the 30 minute, 43% on NVDA in terms of a crossover, okay? Now, what will the New York Institute of Finance say? The New York Institute of Finance will say, well, futures traders only need to win 40% of their trades. True or false? Does Murphy say that? True or false? True, yes. So looking at the specifics on this, irrespective of what we decide to trade this, if we decide to hammer into Algorand or AVAX or ApeCoin, all right, the point is, the New York Institute of Finance will say, well, you're looking at needing to accomplish a 40% success rate on your trade. So technically this meets that determinative, but we want more. We know what 40% is like, okay? If I lower the specific target required to the upside, let's say 100% would be hitting that top side band, 50% would put us in this zone here. Meaning I want to complete and exit upon a 50% target, okay? The percentage of time that we meet that 50% target is higher. Some time frames is into, on NVIDIA is into 70+%, okay? There will be time frames that meets our required threshold, all right? But that's to a 50%, 5-0 guys, 50% threshold, 73% on the monthly good. 72% on the 6 hour, the good. Okay, 68% is still in the 60s. I don't want it. Per se, I don't want it. I'm going to be cautious of it. And as you listen to the differential here, what's the difference, guys? I want expanding volatility. I want the expanding volatility. The framework of what we put together is the highest achieving pattern in the market. And so when I discuss this and I talk about it, I can't talk about it all the time. Much less I feel like we could exclusively focus on it all the time. We could. Maybe we should. There are opportunities within Murphy, New York Institute of Finance that well, we just need that 40%. Okay, things get a little tricky. He also says, well, just let your profits run. Then you got to let those profits run, because it'll take a few trades, right? Cut your losses short, let your profits run. You can let your profits run all the way up and all the way back to zero. Yes, you can, without a doubt. Taking profits is a good idea. He discusses that as well, without a doubt. So as we look at the distinguishment in terms of the percentage probabilities, the patterns, just lock it in. Lock it in. This is a different animal. We like this animal. We hunt this animal, period. We hunt this pattern, right? Yes, we do, for a reason. Now, the crossover, cross under, you would start to say, okay, well, is there a difference? And rightfully so. Would there be a difference if, for instance, you were looking at the hourly crossover along with a specific momentum shift to the upside? Okay, now you're starting to maybe better analyze what a participation enhancement might be in terms of a profitability enhancement, okay, additional level of confirmation. Now, what is that additional level of confirmation going to do if you're trying to refine and increase your max probability on a crossover equation, crossing over, right, the 20 moving average, top side band would be your target. We see some great trades like that, particularly on higher time frames. Recently on NVIDIA, it's been awesome. What is it going to do to the equation if you take something that out of the starting gate is 72% and you start adding in levels of confirmation? What's it going to do to the 72, 75%? What's it going to do, guys? If you take the same rationale and say, okay, I want to enhance my probability, which, yes, of course, if it can't be done, then we're in the wrong, guys. We're in the wrong, we're spending our time on the wrong thing called the market. It lacks integrity. If there is no confirmation possible here at all with any other components of the market on a crossover, then we're in the wrong. We're chasing chance, right? Or we're purposefully being frustrated. What I will say is this: so the 60 some odd percent, or the 40 to 60 some odd percent that we would see in a crossover, yes, can be enhanced through confirmation. If you're looking for confirmation through a higher level of reliability. To produce a higher level of reliability. But if you're going to apply that also, that rationale of, well, how can I increase the probability on my specific already top probability patterns. This to me is a winning argument. That to me is something that stands out clearly. It's why, and Let Friday, I love that it happened. I don't like it because it's just, gosh, you had to fill that gap, is the bottom line. Great reinforcer for a gap fill for us on Friday on Tesla. But as we look at it, the top number one reinforcing matter is the more that you're really distracted from this, and to the extent that we have trade opportunities, and blackjack is tough to call. It's tough to call because they pay like clockwork sometimes, just up, out, and over a descending triangle. To the extent that there's any type of a challenge in identifying expanding volatility, let that be on the record. We'd like some clear enough technicals to be able to really identify this. This was a challenge on Friday for NVDA, noted. So in the context thereof, though, let it just serve as a reinforcement. What are we looking for? Expanding volatility. Why? Number one producing pattern in the market based on the last 40 years of pattern analysis, 40 plus years, okay? This also has that added advantage of a clear bottom side support entry. If it breaks, we like it more. We just typically like it more. We understand within a micro analysis to a macro analysis that we always want to be prepared for the additional macro feature, right? The additional lower level of support if this decides to just hammer to the downside. So really in terms of levels of exposure, as we look at a attempted retest, and again, what do we know? When people are when something's breaking out, you got it. When something's breaking out and everyone's looking up, what do? We need to look at placing orders. Where are orders being placed? How are we going to formulate the market, build the market around the other traders instead of them building it around us? They're going to build it around us if we're just going long, 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 long. You know that, right? They're going to build it around us with orders at a lower level of preceding resistance, flip to support, right? We got that down, okay? So while things are trajecting up, we're in the process of structuring orders in below, looking at, and you have to understand, they'll pick up sometimes, they'll push to lower levels. If we were to look at this specific volatility function here, yeah, we would get that push down into preceding level of resistance. Why? Because we do have about that 60%. Here we go again with a 60 some odd percent chance of revisiting this level of resistance throwback here, right? So as you're dealing with anything in the 60% probability, understand it can hurt, period. It can hurt. You know this. I'm going to reinforce that until everybody gets it, until we don't even want to talk about it, most likely. But they can be good trades. And there's a fundamentally, there's a sound rationale for looking at volume. We're looking at momentum. We're looking at the different series of indicators to achieve some sort of a confirmational hit back to a preceding level of support, right? But we have to balance that. We always need to balance that. And I'll suggest this as you're looking at your micro trades. Okay, as you're looking at your micro trades, as we're seeing Tesla work back on the 3-minute into a specific preceding flat bottom support here. Okay, so to the extent that we're in process of having an achievement back to this very, very thing that I don't want to just outright cast into a bad light, I just want you to be able to distinguish your participation in the market, okay, on let's say a really high probability pattern, okay, from those probability patterns that are not so high, or those pricing conditions that are not so favorable, without a doubt. And you're seeing a little bit of the framework here in terms of like the 3-minute downward momentum, okay, upward momentum. And 1 second, let me get a sip of water if you guys would not mind. 1 second, please, I'd appreciate that. And there we go, thank you. So this, I don't want to cast doubt on this and just remove it from your level of consideration, okay, in terms of your wanting to trade this. Just deploy a stop loss. Understand what you're dealing with out of the gate. You're like, well, this dog in the fight's a little bit, this dog's a little aggressive sometimes. Yeah, we don't know, we're not sure we want to take him home from the pound. We're just not sure that we want to take this dog home from the pound. It's a little bit aggressive. He's as you look at it, it's like, well, it's just a chance he's going to be a little bit aggressive. It's a return to a preceding neckline. Just, please, we got to take him home, please, please. Just understand you're looking at a dog that can be a little bit aggressive here, right? I know you still want to take him home from the pound, but just understand, beware. Anytime you're dealing with that 60% probability. Now, the increasing volatility that we see in this context is just a little bit more friendly. It's just a little bit more friendly, a little bit more consistent. This expanding volatility here, a little bit more predictable, okay? It functions a lot better as something to focus on and spend your time on. You guys know this. If you trade a lot, you know that these are what we look for. And the fact it wasn't easy to find, I will tell you, the fact that it was not easy to find is we do see that pickup where, let's go into the 1 minute. I try and stay away from these micro time frames, but preceding level of resistance, yes, boom. Nice hit into preceding level of resistance, up, out, and over 0.69 already. That's nice. That's nice, guys. Nice hit into that preceding level of resistance. Again, the discipline, and this takes discipline when things are heading up because we're always looking for upside price action. You know that. We're always looking for upside price action, right? So we get it and we're breaking out and we have targets. It's like, oh, hold on. While everyone's, while the market maker is attracting all those latecomers to the game, it's like, what are the guys who rode this up doing? Stacking orders, formulating the market around the other traders. True? You got it. Boom. Nice, consistently, as it's been very consistent. You agree on this specific retest? In terms of formulating those orders, it's been very consistent to see that. So recognize that this is your dog in the fight. This is your best dog you're going to find in terms of a pattern. I just bring up the analogy, guys. But looking at this pattern, here is what we're looking for, without a doubt. We'll trade the cup and handles. We'll reinforce specific preceding resistance to support flip. We'll take the specific upside targets in fashion. We'll look at any breakout. We'll look at any return to, any level, any function. Just be aware that some of these are not built to just accommodate. Some of them are in that framework of, as we look at let's see that descending on NVDA, a descending wedge. It'd be nice to see some completions by the bulls back up into some preceding targets. But some of these patterns do you think that some of the patterns are just potentially inherently risky to an extent? Yeah. Let's just call that. We would say yes. There are some that are less reliable, some that are more random in terms of their ability to capture profit or value. And when you trade them, you're like, well, here we go again. Just don't let it be a bad habit. And when we talk through things, try and put up a bit of and I'll just tell you, while you're putting up a bit of a shield on this, right? As you're putting up a bit of a shield on this, there are going to be multiple types of traders. You're going to have traders who are very well accustomed into, or nearly have a program function in line with, okay, 50% doesn't hit, out, forget about it. I want my max probability move to the downside, it's out, stop loss, boom, gone. Okay? Scheduled into a specific 100% return, well, okay? There are functions, abilities to enter into the 50% or the 1%. Some trader's going to decide he only wants exposure to the 50%. If not, that's it. Adios. Right? Some traders are going to add in a 1% level. It's at your discretion. Right? Just understand as I'm talking about this and you're considering entering in below a head and shoulders, what's the key factor here? As we talk about it, you become interested in it. You begin to assess it and it becomes something that is potentially favorable and you want to assess and maximize your probability on. But I can't repeat every single sentence, but you have to know as bedrock knowledge. The whole overall return to function here is lower. It's less. We're in, and we could just say that we just don't deal with these. Some of them are nice trades. If you don't really pay attention to your entries here and to tight stop losses. I've been so big on that recently. Your order and a tight stop loss, right? We've really been paying a lot of attention to that, okay? Because it just doesn't hurt as bad. Whereas a carry and I have to see and I have to wait and I have to, no, okay, no. While other traders, and we'll get into this just a bit, as other traders are writing down and as you look at this let's look at this on Tesla. I keep saying, well, we really had a rollover in momentum, right? Look at the bottom three screens here. The bottom three, look at the 4 hourly. We really had a rollover in momentum, boom. Yeah, big time. Look at the daily. We really had a rollover in momentum. Boom. Yes. Nice near completion to the daily lower band. Was this enough as we talk about fractional completions to that lower side band after the cross under? Was that close enough? It's like 90%, right? To the bottom side target. You got it. Higher percentage probability of the hit to a 90% than the full percentage. We just went through that. Okay, so we're seeing that play again, but in play again, the crossover strategy. So bears are happy. Guys who took a short are happy. Realizing the daily, look at the red on the screen. This is momentum. Shift to the downside. Boom, 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 boom. On the daily. Okay? The weekly. Weekly and the monthly can be a little bit, I won't say difficult, but a little bit tough to handle at times on momentum analysis. It just can't be. Okay? Even on the hourly, we had some some issues trying to recover, etc. But looking at the hourly, boom, 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 boom. Okay? That's momentum. So being able to recognize and let's say particularly not get hurt on a move when you're on the 1 minute, 3 minute, the 30-second, the 5 minute. Do you have a carry trade? Are your carry trades defined by your larger time frames? If your larger carry trades are going to be defined by your 30-second time frame, you're going to have, and you're going to ignore, guys, we cannot ignore, let me say this, we cannot ignore the larger time frames. For instance, on Tesla, down on momentum. The 4 hourly, boom, down on momentum, the red, okay? And I have this color coded so we can discuss this. The daily, boom, down on momentum. Now, again, minding this feature in play of as Tesla pushes back into the 20 moving average, we know bears will try and reinforce this. That's going to be the challenge for today, okay? That 20 moving average in terms of they'll attempt to go short. We have, let's take a look. Let me switch to the monthly real quickly. Let me see what we've got. Yes, monthly was in play, is in play. 20 moving average. Do you have the monthly somewhere on your screens? I looked at this last night. I think VIP got a copy of this in the back. But the monthly 20 moving average, right, is in play. So to the extent that you're framing your carry trades, your larger trades, and it's one thing to say, well, you know, I'm going to do that, or I am doing that. But if you're doing it, you know you're doing it. If you're not doing it, you know you're not doing it. Okay? So don't ride the fence on saying it's going on or you're doing it and you're really not doing it. For some reason, if you're not doing it, you need to change your approach to the market. I would just recommend you explore that. If you're just swing trading lower time frames, maybe it's not necessary. You can look at the probabilities involved and say that's fine. I'll just take the probabilities and work with my micro patterning. But the macro trades here have been nice. Looking at NVDA on the daily, right? What do we have? Momentum heading to the downside. This red on the daily, cross under, right? And boom, nice moves. These were great moves on the larger time frames. And you'll start to get into some situations where you're like, well, there's some divergence there. I didn't like the divergence. I was being told, the indicator was telling me we're going, and this is not easy. Looking at the shift in momentum on the 4 hourly, and we noted this on a video last week, definitely some divergence in terms of the that 4 hourly. We were actually going up and had a divergence in terms of the momentum as we were writing down here. So what did we have during that time? The only, I'd say, one of the mitigating factors on increase of that 4 hourly divergence. We see the 4 hourly be tricky on divergence, not only on NVIDIA. We see that on Bitcoin frequently. Yeah, 4 hourly is in play, is not in play. But looking at that, we had the downside target on the daily. So just note that. Well, we have a target at the downside. And if we really want to just put the cherry on top in terms of this discussion, what do we always say? Now let's really hammer into this. Okay, we have a flat bottom support. Let's listen up. We have a flat bottom support precedingly Friday on Tesla. What is it best? We have a target. What do we need to get to our target? Yes, we need we need a pattern to get us to target. So we have a target being preceding flat bottom. Let's not call it flat bottom support. It's a neckline, right? Very clear, head and shoulders. So as we're going to look at the recovery to a target, and a target is, guys, it can be directional. If you want to go up, you want to go down. What do you need to go up? Well, I'm going to say you need a pattern to go up. That can be a target. If you want to go down, well, you need a pattern to go down. Because typically, if you'll frame yourself into that line of thinking and thereby start to apply the specific probabilities in play, your life will be a lot easier. Okay, in line with the specific preferences that we decided or discussed this morning, not decided to discuss this morning, decided to discuss. But looking at a return to function on a preceding neckline on Tesla on Friday that just technically was hard to explain, right? Technically, it was just it was light volume. It was no problem, and it just still decided to upset the traders. Yes, you'll see that in the market. Period. But the ideal here would be, well, we have a target, we need a pattern to get us to target. That is an ideal, guys. It's something we repeat all the time. First of all, you need a target. Second of all, you need a pattern to get you to your target. If you will require that fundamental step, and the same way that I say, buy at support, sell at resistance, trade your patterns, hit your targets. Boom. Okay? That's straight out of New York Institute of Finance. I give them credit for it, but it's a great maxim. Buy at support, sell at resistance, trade your patterns, and hit your targets. To hit your targets, what do you need? You need a pattern to get you to your target. All right? So, without being overly repetitive, that is that's a nice approach that we will stick with, is get your target. Get your pattern to get you to your target, without a doubt, okay? Let's dig into just a touch, and yeah, so the additional feature here in terms of the momentum. We've been looking at this and reviewing this, but looking at some overriding concerns. Do you have confirmation would be the issue. As we were to look at, let's say, the 4-hourly on NVIDIA. Let's look again at the 4-hourly on NVIDIA. What we would say here is, well, we have momentum technically shifting to the upside, trying to shift to the upside here in this zone. Do we have confirmation? How's the daily? We don't. We have, during that whole time, we have nothing but bearish momentum here. So the sting can be taken out of some of these events as you become not more conservative, just more discerning in terms of your specific involvement in the market. That's it. Are you requiring, and you may want more trades, I understand. You may be taking shortcuts because you want to involve yourself more, either through a level of activity or just to work into the additional, what we say, guys, to work into additional profits in the market. You want to trade more. Your specific reason for shortcutting anything, I would just encourage you to lay out your own bedrock fundamentals. Okay, in terms of the percentage probabilities in the market, just don't forget them. Do not forget them. And buy at support, sell at resistance. Trade your patterns, hit your targets. What do you need to get to a target? Well, ideally and really, we need a pattern to get to our target. Okay, some of the opening, and we do need to discuss this on open. What do we get the opportunity to do? We get the opportunity to play. We can look at we'll look at the stats on this. We see a re-hit on the 20 moving average on the 3-minute micro factors in play. As we look at the opens, it's like there are two categories, right? On something we're trading that has volatility, it's going to open up to the downside. And what is that? Well, that's a great opportunity to enter long. All right, there's one scenario, right? We're open to the downside. It's a great opportunity to enter into a long. Real easy, right? Or we open to the downside. It's a great opportunity to enter into a short, and we're looking for a continuation, right? So we have really two options on open. We can complicate the heck out of it. We really can, can't we? We can complicate the heck out of it. But when we're in that mode, right, of the open, when we're enjoying the volatility that's ongoing, when we're looking at just a flash trade entry, the excitement of some volatility on the screen, we've got two options. Yeah, we've got a drop on open, and hey, let's get in and try and make a point. Let's try and make a percentage point move to the upside with getting into a long on a drop, right? We have the calculated entries we look at for that, but it is a bit, I won't say gunslinging, because we have some highly calculative kernel functions in play, period. We do, right? We have some highly consistent, like Kaplan, RSI, stochastic, and MACD. We have some really, really phenomenal tools. We have, if we were to look at Fire and Ice right now on NVIDIA, There are traders who will just sit there and I'm just going to trade fire and ice, forget about it. This is too complicated, forget about it. Yeah, we're kind of ranging sideways. I like the hourly pro top line. Pro, meaning pro, guys, top line. Okay, on the hourly. You got it, engaging right now. So as we look at the, I don't want to say it's haphazard, but there's some hot action on the open. But I also want to simplify it for you this morning a little bit. It's like, well, the price is down. Okay, great. Well, let's get in. We got an opportunity for a long. Let's see what kind of volatility we can catch. We try and focus on highly volatile issues, concerns, right? Without a doubt. So let's just say that and I don't want it to sound haphazard, but it's not overly complicated. It's really not. We get into a lot of the calculations, a lot of the our tools surrounding some of the the basic questions. We've got to drop. Is it going to recover? Is it going to recover? Is it going to perform? What do we start looking at in terms of, as the day proceeds, we start looking at issues like, okay, we've got targets on the larger time frames. What are my patterns in play on the larger time frames? What are the larger carry positions that have been paying on asset X, Y, or Z? As you spend the rest of the day and you're looking at, or for the next day setup, you're looking at your next carry trades, just appreciate the fact, please appreciate the fact that your micro flash trades out of the starting gate on open are not going to dictate the entirety of your trade week for the next week or 2 weeks, et cetera. It can, right? And that we have an open underneath the weekly, but I just want you to distinguish on kind of I don't want to say haphazard, but you've got a chance as a trader. You have a chance on a market open of a drop, hammering into something that's been real resilient or showing a lot of volatility. And you know this. I hear you guys tell me this. It's like, well, I mean, half the time, most of the day it's gonna go up, it's gonna go down. That's part of what makes trading. I don't want to sound inconsequential in terms of the technical framework because we're extremely technical, right? But it doesn't have to be overly complicated. Yeah. With that said, until the consistency is there, and this is the one issue that is going to pervade every discussion that we have, until the consistency is there, just guard your level of involvement. You know that. Just guard your level of involvement as we look at NVDA on the screen, and make sure you're not exposing yourself to a level that's going to hurt. Period. Those who master that lesson, some involvement to where you feel it and you have the opportunity to participate in the market, period. But if you're not booking consecutive trades, guys, the market's going to tell you when you're doing that, right? You're going to be telling the market when you're doing that. You're going to be excited when you're doing that, right? There's a difference between doing that and not doing that. When you're spending a lot of time with the market, I find that people are doing that if they're applying the proper technicals. But with that said, let's just reframe, this week as a challenge right off the bat and an open underneath the specific 20 moving average on NVIDIA. Let's look as well at a shared componentry on the weekly for Tesla. Okay, what's been happening? We've had on that weekly, I'll just caution you in terms of the momentum gauges. The daily's been more reliable. The hourly has been more reliable on Tesla. Okay, if a specific time frame doesn't match up in terms of back testing, it looks awful. Note it, eliminate it, get rid of it. Don't rely on it. Do not let it confuse or pollute your technical approach, right? Keep it as pure and consistent as you can. Looking at the crossover, cross under, you say, well, I don't know. You're saying 50% of the time it's doing this on whatever asset, but what I'm looking at, just you go with your assessment, your specific back testing assessment. I can walk you through the percentages here. I'll tell you they're higher if you look at a 50% completion, 50% completion, okay, to, let's say, NVIDIA on the hourly. We have a higher probability percentage of meeting on NVIDIA a 50% threshold, okay, 50. We're nearly at that right now. It's close here. We have not tagged that 50% or it would show me a specific green X. It's close, okay? As you were to, let's see here. Now you'll see on this specific candle, just to elaborate on this, you see the X here I always recommend this on a big screen TV, okay? Big screen TV, so you can see your technicals. But looking, you see that red X there? That's the short and the specific exit at that 50%, okay? So we have higher, the more we want, a lot of times, the riskier it gets. You know that, right? So I'm just gonna encourage you to continue to focus on your technicals when you're dealing with a high probability. And again, you're getting into some higher probabilities on a 50% hit on a technical crossover of the 20 moving average. This is NVIDIA on the hourly. However, how many of these time frames are in that 70+% category? Not many. A few. I want the 70+%. I don't want to play around in 60%. I just don't. Me personally. So this may mean, oh wow, which of the 60% is the best? You start looking through and hey, great, okay, well, 68, 69, you start getting towards, okay, there's 70, let's say 69%. Does it round up? Good question. Right, if I look at like the 6 hourly seems like it's got a strong measurement here in terms of just framework to back testing, okay? The 6 hourly is 72%. Adding in confirmation, big ticket item. Knowing crossover, what's loaded up, the 20 moving average. Seeing that on the weekly, being prepared overall, I'm just gonna encourage you to continue to trade the lights out of the market the way that you know how. What's a red cap line mean on a specific time frame? Well, if we have a red cap line pack, we're ready for what? We're ready for potential. You see the momentum shift. Understand that momentum is going to shift to the upside, to the downside. Until this specific bar sets, that bar interval sets. As we look at the 5-minute time frame, I'm looking at a red cap line. That means the bears are trying to, and successful thus far in exerting control. So I'm looking at contact with the 20 moving average, right? I saw that on the weekly with NVIDIA. Amidst the write-up and multiple opportunities to short into a red cap line, it's not 100%, guys. It's not 100%, but we frequently see this in the 70%. Hey, I just said it, in the 70+%, okay? Degree of confirmation, and it is asset and time frame dependent, I'll say that, but we see, based on back testing, specific red cap line contact with the 20 moving average. You have to understand the 20 is going to go up, the cap line is going to go down. So it can be, at some point, if it stays red, it will start to roll over as the 20 moving average is coming up. So the dynamics in play are manageable, as is the challenge to us to include divergences, to include, guys, the market's going to take what the market itself wants to take at times. You know this. It's going to give what the market's going to give. Definitely at times. 2 days ago, if you didn't want this trade, you had to decide you didn't want this trade. True or false? On the cross under the 20 moving average on Tesla, you had to decide and make a conscious decision. I don't want to short. I'm not going to short on the daily. You had to make the decision. I'm not going to short. I understand we've set under. I don't want to place a short order here underneath the 20 moving average. I just don't. Okay. If you chose not to express a maximum of 7.65% max or any of that, that's a decision that if you make it, it's great, guys. But what is your decision based on a macro time frame? Start to look at your elements of momentum. Okay, now this momentum is going to be the same one, guys, you've got on across the board, include fusion, etc. Momentum and MACD at 150, 15 and 199, or you can call it the classic squeeze, and that's all the classic squeeze is MACD at 15 and 199 moving average settings. Okay, you can recreate that classic squeeze in literally, guys, like 2 seconds. Double click on MACD and enter in 15 and 199. That's the hack out of the box for all that commotion about squeeze. It's not that complicated, okay? Looking at that condition, though, of falling, if we were just to assess that, okay, that MACD momentum, boom, 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 on the daily. So amidst the falling MACD momentum, you're going to have to decide, I don't want this short. If that's your decision, let me know. I'm in the back all the time, guys. I'm here. Let me know what your rationale is. You've got to be the bull. If you've got to be the bull, I will tell you, oftentimes, if it costs you on the way down, what is the saving grace? you'll catch the move, I'm sure, to the upside if and when it does occur, like nobody's business, right? Just you need to make sure your profit equation is guys, in terms of your level of exposure, right? Don't disregard all of your technicals, please. I would really encourage you, highly encourage you to do that as we sing up and over that 5-minute average. So I'll continue to work with some of and I tried to slow down intentionally today, reminding you again, this information is really geared towards trying to encourage you to set your own systems up, to have your own tactics in play. If they are not mine, get them out of the book. Let me know if it's New York Institute of Finance. I'll be excited. If it's Bolkowski, I'll be excited, right? Big time. Those are the two guys. Those are the racehorses. Those are the kind of Triple Crown winners that we refer to. It's not a side track, side bet at a ill repute horse track over the weekend. Like, ooh, what'd you hear? Who's going to win? It's like, we don't care about that horse track. That's not even a racehorse. You may say, well, I got information from such and such and so. I'm doing so. No, that's not even a real racehorse. Okay? Like Kentucky Derby style, Triple Crown style, New York Institute of Finance, Tom Bolkowski. Yeah, real like thoroughbred racehorses. Champion level diagnostics. Not a side track with a jockey nobody knows really cares about, and let them go make some money at a side track. That's not big money guys aren't going to be playing around with that. Okay? I challenge you to stick on the right track with that. So what we'll say is good challenges from last week, particularly geared to, and we can divorce it from Powell, but I wouldn't. Yeah. Okay, Mr. Powell. There's a reason people don't like him per se. He's not always popular. I would just encourage you to have a level head about the situation. And he's in charge of a lot. So we give him his due respect, and I don't see any reason as we were to look at assessment or evaluation to the extent we need to evaluate such. It's in our interest to evaluate such, literally for purposes of analysis. I just don't see any good reason to wake up any morning and just be spiteful towards any guys. It's the wrong approach to me. I just want to wake up and be miserably like upset about or just complaining the whole time about someone whose deft hand can literally just destroy the markets. I'm going to pay attention to the guy. Right? That's it. Pay attention. He's probably got a lot more going on in terms of just ability to. I'm not gonna. Let's just cease the discussion. That's me not bantering around, but I'm not gonna. I'll be a little critical, but I don't want to be hypercritical. How about that? And I don't mind the same being applied to me at any point in time. Maybe a little bit critical, but not hypercritical. Kind of infers an agenda and an inability to adapt at best, right? So however things come down the line, whichever key political figure is there or otherwise, in terms of Powell, et cetera, we adapt. It's the market. We don't mind lower prices. We got to go up from somewhere, right? So looking at the framework for NVDA, looking at the kind of the flux that, and this is going to be an important week. They're saying some seasonality issues may be in order. Yes, to the extent that we are allowed to, guys, that we are encouraged to participate in potential larger macro moves. I would just encourage you to pay attention to your cap line, pay attention to your momentum, pay attention to the key focal considerations that are working the best for you. And if nothing's working for you, I want you to continue to increase your volume. Just recommend it, guys, to increase the volume of your trades. As we flip over to Bitcoin, for instance, do your 100 rounds, get involved. The good thing about crypto, it's open 24/7, 365, as the guys in Australia know. So you're constantly going to have the lack of complication of having to deal with equities at all. We cover them to the extent that they're included on a crypto exchange. BTCC, we enjoy just trading on that tokenized commodities or equities or whatnot, that subsection they have. So that's the extent of our involvement with it. Equities can be a little more complicated, more informationally driven, but they can have some great opportunities to trade. You probably grew up with Warren Buffett, et cetera, in terms of like your love for stocks and the stock market. So it's kind of built into what you guys are in, though the new advent of crypto and Bitcoin is really it really has been our mainstay with some needed volatility. That necessary volatility has come at the market open while Bitcoin's been just sideways. So it's been a nice fix for us, catching some major moves and some primary moves in the market on some equities has been a feather in our cap, and something that I've seen a lot of, multi-billion-dollar shops around the corner here and there just not do. So that's to all of our credit. That's nice. It's good to be in the trade group and to know that. And shout out to all those guys as well. They've got some other work going on to where they may not be as plugged into catching some major moves on some primary equities, right? They may have some different functions ongoing. So as we look at the 30-minute, we see a reinforcement on the 20 moving average for Bitcoin. And what do we see? What do you see here? What type of a patterning do you see on the 30-minute? And couch the 30-minute because it can be your friend or foe, as we say. But what do you see here? As you look at that chart, what is going on? What do you see in the opportunity to participate in here? Potentially you got it, expanding volatility. Why is that important? For reasons very well discussed. You got it today. Is it a 60% maybe kind of pattern? No, it's not. What's the saving grace of this pattern? Where's your level of entry? Clear line of support, right? And just the more that you can identify these patterns, learn to work with them and focus on them and distinguish them separately from the other, just guard yourself when you're looking at your nice reinforcement on that 5-minute, nice amidst some downward momentum. Been downward momentum here on the 5-minute, recognize such. And you guys have your momentum indicators. This is just a new one I've decided to put together so we would have a little bit more of a visual componentry in terms of dropping momentum. And it can be obviously multi-time frame. We've got some challenges in dealing with momentum. It's not something that just is an arrow up or down at all times. Let's go through some targets just actively as we look at the specific incoming potentially on the hourly for Bitcoin, the 20 moving average hourly on Bitcoin. Let's take a look at some assessments for some targets to the upside. Are the bulls performing or underperforming on V? As we look at this, guys, cliffhanger. We'd love to see a hit here. Like to see a hit here on the NASDAQ. Let's take a look at any targets to the upside or targets to the downside based upon the guys over or under the 20. Now, what does this give us? Well, on the last 20 specific time intervals, whichever time interval you're on, guys, the bulls are performing, overperforming or underperforming, right? So we would expect them to continue to perform, right? At least to 50% of that target would be, if you were looking at and assessing these specific targets that I'm about to discuss. Look at the 5-minute on NVDA, nice pickup on the 20. What is that percentage here? Looking at a 0.35 or so. Okay, so NVIDIA, we're looking at a target to the upside on the 5-minute, on the hourly, okay? And we have a target below right now on the weekly. Okay, so 2 targets to the 5-minute and on the hourly as well. Let's look at that hourly target. We have that crossover on the hourly 20 moving average with a top side. And I'll tell you there is an interest along that level of support and a near 50% completion already on that. So max probabilities, we're looking for that 50% completion, but overall it could have been looking at about a 2.5% move to the upside on that hourly. With some compromise features, breakout included. We'll go back to the patterning in 1 second. Looking at, let's just go over, and that's on NVIDIA. So the 5-minute and the hourly are in play. Let's look at Tesla. As Tesla also sitting on that 5-minute up and over. Again, crossover with some orders here on that 20 and some nice action to the upside. Just small action, but nonetheless, as bulls try and reinforce anything on Tesla, we say that's nice action, up to a 0.56% trade. Looking at the targets on Tesla, 5-minute remains a target to the upside. Okay, 5-minute to the upside. We also have the weekly and the monthly. We're above on the monthly, we're below on the weekly. So assess that in terms of your participation, and notice that we don't have full confirmation between the weekly and the monthly. We just don't, okay? Let's look at this, and this is just where the morning will probably take us on Tesla. A bit of a bull flag, we would say obviously the flag with a recoup again, and this is not the end-all be-all pattern we are looking for, right? This, or the end-all be-all target. What do we need to get to our target? We need a pattern to get us to our target, okay? If our target is the specific preceding flat bottom support here, okay, on this descending triangle framework on Tesla, what do we ideally need to get us to our target? You can have a preceding level of demand interest support pivot to the left as an entry. You can have all different types of entry conditions, but ideally, if you're looking to achieve a target hit, requiring a pattern to get to your target is the way to go. So what we're looking at here is bulls needing to get out, up, and over a very complicated, I would just say, and we see these kind of V-shaped cup and handles. This is a very complicated V-shaped cup and handle, arguably implied, we'd say arguably implied as well, a bit of an ascending triangle framework. Agreed? Concur? Flat top resistance with a real choppy type bull flag, expanding volatility flat. Top resistance, descending line of support that has a category of its own, right? In terms of that pattern framework. So the bottom line in terms of the myriad of, or the accompanying patterns here is the need for bulls to break. We always want to check our candle wicks. You got it. The bulls need to break up and over 240, call that 244.75, right? Is the level for bulls to break to get up and over, right? To get this specific, and isn't it just kind of, isn't it convenient? We have to say, isn't this convenient for Tesla to wake up and on a Monday morning after just completely torching the notion of a return to a flat bottom support on, but it's good for discussion purposes. And it's highly relevant in terms of I mean, look at the NASDAQ. Give us the lesson, the market, I would say to the market, please give us the lesson on a smaller time frame, on the 1 minute, 3 minute, 5 minute, no problem, on an asset so that we can apply the specific framework, okay? And this is why we focus on the micro, so we can apply the framework to the macro. This is the NASDAQ here. This is a big issue. This is the key consideration. If we break, are we going to return to the flat bottom support? That is on everybody's agenda. So to the extent that we would look at, well, it's been frustrating on Tesla, on the 3 minute, on the 5 minute, man, what was the issue? Return to flat bottom support, right? So the discussions we're having are hugely relevant, highly beneficial, and we can't get much through, guys, further through the evident truth that that's what's in play here, right, on Tesla. Look at that 3 minute, and it's just, so to the extent that it's like, well, it's just, it's something we're consistently, being challenged to deal with in our trading. You're being challenged at the lower time frames, all right, to establish and reinforce rules, et cetera. And its applicability to the macro right now, you're being literally putting through a review process. You're being put through a review process to lay out and reinforce your overall principle framework, technical principle framework on things that matter on larger time frames. True? Absolutely. So as we discuss these lower time frames, as we discuss where things can be tricky, how they're tricky, what is the confirmation level, what's our probability, what is our requirement for confirmation, what is our approach for a kind of a blended approach multi-time frame, what are the tactics that have been paying well versus not, what do we want to backtest on, for instance, if we load in on the Bollinger Band in terms of the larger time frames, let's say the crossover, what are our percentage probabilities? What are the hits at 50% versus hits at 50% versus hits at 100%, right? And you can take it through Bollinger Band, or you can take it through whatever school of thought and tactic you want to, right? Okay, looking at the immediacy of the situation at hand, we're underneath the 20 moving average on the weekly, on Tesla, NVDA, on the NASDAQ. Bitcoin did us a favor and already hit this level. Boom. Bitcoin front ran the entirety of the situation. Yeah. Where are your Fibonacci's at? Where are your retracements at? We're at this top level. Huh? So we're at another hit on the 23.6. Okay. That's on the NASDAQ. This is on, let's take a look here. This is on NVIDIA. This is on Tesla. Take a look real quickly. Quick draw, guys. Quick draw. Tesla, aggressive at the 38.2. Hello, we recall. Tesla, over, down, and below the 23.6. We recall. Okay? But the shared componentry of it all is we are open, down, and below the weekly. So to the extent that you are trading I want to congratulate you and say it's a pleasure to trade with you. To the extent that you are not quite to the point where you're really, really involved in anything, I'd say in terms of trades, I would recommend that you start with two things. I would recommend, aside from momentum, aside from stochastics or anything really particular, as you would look at your opportunity to participate, I would recommend you start assessing the 4 hourly cap line pack and the kernel derivative on Z-Pack and Capline Pack, and those specific trades that you start looking at and back testing those specific trades. Okay, that Capline Pack is exclusive to you, and they've performed very well. Okay, they've performed very well here recently, particularly. So that would be my go-to for someone, and therewith as well, looking at on the 4 hourly and the daily, irrespective of what you want to look at, guys. If you want to look at soybean futures, I grew up in high school reading about those. That was just my fun during class. Let's read about soybean futures. Okay, but looking at the that's just that kind of kid for whatever reason. But looking at the dynamic at play, a flat bottom support, you'd like to see this hit. Agreed. Lower targets, yes, on NVDA. In terms of lower orders, but the framework in play is the following: assess the most highly probable patterns, your participation with those patterns on the most highly consistent time frames. Yes. Then get into the 1 minute, 3 minute, throw back into a perfectly or imperfectly structured head and shoulders, neckline, a blackjack. Some of this stuff is highly, it's none of it's experimental. Okay, none of it is conjecture. It's not. But saying all you have to do is look at a book that has 1,200 pages in it, that's just a big turnoff for a lot of people. But the good news is there was enough work that went into that encyclopedia of chart patterns that you can actually reasonably rely on it. Interface with Bulkowski, get some of his direct data, and shout out, Tom, hope you're doing well this morning. Get some of his direct data, which he has sent me, and you'll know that you can rely on it. So it's very well laid out, guys. It's very well done. So the good thing is you don't have to pour through all of it to get a good understanding of the way it's laid out. And guys, that's just that is what we focus on. But aside from all of that homework kind of to do, turn off, look at your cap line. Look at your specific kernel derivative, that RSI stochastic MACD. What kind of signals do you have on the 4 hourly? Were there any good trades on what you're trading? Who knows what you're trading? Maybe crypto X, Y, or Z. Okay. Where were the good trades on what time frames? And start to understand, look back at the Z-Pack Bollinger specific stream that I did, and really re-listen to how that Z-Pack and kernel is calculated 100%. What is that based on? That volatility expression, what is that? And if you can spend a couple hours going through that, and shout out to Tony, I know you really listened to that specific stream. You said it's the best thing you've ever heard, that the dynamics involved in our cap line are really, really straightforward. There's really a reason that that cap line will turn green or red. And the specific Z-Pack, that Z line, that band below on the Z-Pack, is just really, really an accomplishment to be able to trade with. So if you're kind of like, well, I might look at that, I might not look at that, I really, really highly recommend that you look at that and apply it to your key time frames. Also, we've been discussing, I'll reinforce one more time, positions. Yes, what's my preference? Higher amount of capital with what? A tighter stop loss. Well, you may say I prefer a higher amount of capital and a lower stop loss. Okay, well, on high leverage, guys, that's my preference. You tell me your preference. Look at this on, this is nice on Bitcoin. Nice on Bitcoin as we discuss flat bottom supports. Yes, indeed. This will continue to present an opportunity for your participation in the market in the form of front running the analysis required. Did bulls meet the objective to the upside? No, they did not engage. So it's tough also to say, well, I want a breakout pattern threshold to meet, but I don't want to be a breakout trader, right? You got it. What do I really like? What do I really, really like? Let's see, what is this? I really, really like that. They just flew up on the screen. Me personally, fire and ice, I just like it, guys. It is an incredible tool. We can go through how that's all established as well. It's really my preference on larger time frames as well. Set some alerts on fire and ice. Set them on your 4 hourly and your daily. If you have no idea what fire and ice is, guys, that's the King Kong. That's the good stuff. It lay waste to a lot of these patterns. It's really something to pay attention to, but never to not be overexposed on as well, and to have understanding in terms of when it pushes into a specific line, in terms of let's say a pickup on Bitcoin, to understand that it will push, to understand that sometimes it's so highly precise, and on a strike basis, you'll get a phone call and it's like, well, that move is over. So sometimes it's literally built for being just in front of the screen, without a doubt. But we see an incredible amount of accuracy on fire and ice. We would not want to trade without it. Pivot Finder Lite. You guys doing well on Pivot Finder Lite? What did Pivot Finder Lite do? Take a look. Pivot Finder. Let you guys into, signed you up for a Pivot Finder invite script, right? What did we do? What's going on? Sky Lund in the house. What's going on, brother? Nice to see you. Boom. Thanks, Scotland. Appreciate that. The Pivot Finder daily on Bitcoin. Radial basis frequency. It's a radial basis frequency kernel calculation. Easy stuff, huh? Yes. What does it do? Measures the open and the close with a machine learning accompanying tactic, computational tactic. Huh? Okay. So this spike here on the daily tells us we have a real strongly significant doji, not just any doji up here, not just any doji. This is a really significant doji. It could result in a shift. Lower time frames may have more of these than are welcome. You can filter those out by changing your gamma. Sounds fancy, huh? Sounds really fancy, guys. Where are we at on Bitcoin? Down underneath the 20 moving average. Assess what? Assess your momentum. We got a drop in momentum. Take a look at this. If I add back in on your momentum all in one, if I add in the specific daily, we had a flattening of that momentum, didn't we? Momentum, this is the daily right here. The momentum started just to flatten out, right? I've got this all in one that I put you guys in touch with. Then we had the spike, a flattening of the daily momentum, spike in terms of really statistically significant kernel radial basis frequency calculation. Sounds like we're speaking, you know, some offshoot of Dutch, possibly. I don't know. Some radial basis frequency calculation, right? With a flattening of the momentum. Boom, boom. Nice hit. Nice hit. Be prepared for a shift in the market if that radial basis frequency kernel does fire off in the form of a peak, particularly on the, you look at the time frames in the back, you know which time frames we're plugged into. Nice to see that action. Where was the preceding one? You may get some misfires here. It may take you a bit of time to actually interact. This was a nice fire. And we did have a nice move to the downside there to a moving average. Yes. To a moving average, that weekly simple moving average nearly engaged after this preceding one here. It was a nice hit to the downside. Monumental shift doesn't have to be a couple percent. That was nice. Just volatility, okay? Statistically significant doji. So as we get into the details, we have some reminders here. Let's just look at this as we look at and I'll leave you guys on this on NVIDIA. Looking at resistance pulled down, okay, level of support, boom. And what did we just hit down into? We just hit back into a throwback. Again, guys who are just structured to the upside and just on a breakout, just killing it. We got to take it. We got to take it to the moon. While that's occurring, you've had multiple hits at preceding resistance. Okay, 2 hits at this preceding resistance level to trade throughout the morning. You guys got that? Boom, boom. Those were nice hits. Looking at that first one up to 1.2%, second one in and around neighborhood of just say 0.5%. And now you're testing that next level down, which was set. So NVIDIA just being kind of too nice, huh? Multiple hits at the same level, boom. Hit down into a perfect re-hit, pullback, throwback into that preceding resistance on that creme de la creme #1 pattern that we focus on, okay? So help me stay focused on those. Be like, man, we just want to rock the bells, man. All we want to do is rock the bells. That's it. Let's rock them. Boom. Reinforce that with me. I'll try and reinforce it with you to the extent that we just focus on these bell-shaped pattern formations. Yes, we will continue guys, to reinforce the reasons why in no uncertain terms. Hope you're doing well this week. It's a good start. It's Monday. We will note the fact that we are in a bear flag on NVIDIA. We would love some additional downside price action. We are on the cliff. And in terms of this, I will tell you this, we're below that weekly on multiple assets. Bitcoin did us a favor and moved down on that weekly. Bitcoin moved down already on that weekly. Let's take a look at that just real quickly. Now, Bitcoin has already taken care of this for us. Nicely done, under the 20, boom, to target. So, nice move. If we can get that same move on equities, it'd be fantastic, right? It would be nice, guys. We have some overperforming and underperforming assets in the market. We know that. So we'll just say that we've opened Monday on a cliffhanger. That's just it. You can look at the charts. You tell me what you think. It's been nice to talk to you this morning. This is London with Bitcoin Spike and VIP Trader. Let me make sure that I give you, as we see an attempted recoup on Tesla 3-minute. Mark that, guys, at 244.50 or so. 244.50 as the level to beat. Did we hit the downside target? Not. We did not. 50%? Yes, we did. That 50% the way there, higher probability. We did. Mind yourselves, we discussed that fact today, and quite well. That's a nice addendum to our general discussions in terms of the crossover. You just see those green X's, that's at 50%, 50%, boom. Higher percentage probability there in terms of the target. Now, I wanted to go through, make sure that you have your Bitcoin, just the status update, 5-minute target right now on Tesla, just FYI. We're up back and over that specific 5-minute, which is started as a grind along kind of level. But I want to go through Bitcoin just to make sure that we cover BTC, our mainstay here. And let's take a look at the specifics here. And you guys know London, Bitcoin Spike, former hedge fund owner, private, non-SEC, not financial advice. Let's go through. We just do this for fun, right, guys? I suppose. As we look at this, bit of a cuppage handle formation, Bitcoin. In terms of targets, we've satisfied the majority of targets to the 50%. If I go ahead and line this out and say, no, I want to look at 100% basis, 100%, are we really over the edge of any specific moving average right now, where the bulls are outperforming or underperforming? The 30-minute pops on as being relevant. We still haven't hit 100% into, that's close, huh? Look at this. So when I say 100%, that's 100%. That's the trader who's waiting. We still haven't hit that top side band. That's close, right? So when I get to that 50% calculative, what happens? On that 50% calculative, we've already satisfied that. We crossed over and we exited already precedingly with a rehit on that 20 moving average on the specific 20 moving average. So that 30-minute target's not there if I change the parameters from 50 to 100, requiring a near hit of 50% instead of 100%, okay? So that's just part of the action that we have going on, and it's good to go over it with you. And again, on that 30-minute, what do we have? Expanding volatility, right? With a bit of equities that have us doing this, in terms of end the cuppage and handle with preceding level of resistance to the left, noted, okay? Take care of your volatility, or it will take care of you, right? Without a doubt. Focus on those high probability patterns. Exciting, guys, week incoming with the open underneath the weekly. This is it. Now, where do you want your shorts? Typically, where do you want to engage in your shorts? Typically, we want to engage in our shorts higher. You know that. Several of you have. If you're not doing that, we've been through the who, how, when, where, and what of how you might start to do that. This is London with Bitcoin Spike and VIP Trader. Nice challenge this morning as we see everything opening underneath a key reinforced framework level. Don't give up on your returns. Don't do it. If you find yourself struggling in the market, I'm just going to encourage you to, guys, strengthen your focus. Okay, as we talk about things, really strengthen your level of focus on what you know works. You can read the New York Institute of Finance, like, I don't get returns with that. If you get returns and you're getting consistent returns and your returns are sound and consistent and you're booking 4 positive trades, and you can read a page out of New York Institute of Finance and be like, man, I tried that, it doesn't work. Focus on, guys, what is working for you as well. Be practical in, because some of these specific issues we deal with in terms of volatility are are completely, as we look at Tesla chart, are completely out of sync with the last 40 years. If we were to look at it, look at the shot to the upside of market cap on the boom of NVDA. That's a haymaker, guys. That's a super trend, literally part of kind of an industrial revolution style chart that would be included in Prechter's Elliott wave for purposes of super trend analysis on some dynamics that would fit into an overall evolution of kind of industrialized and high technology driven society or evolving society. So some of these factors you're going to look at are breaking the mold just a touch. Noted with some of the advancements that are in play. It's not just well, what is this indicator? What is this oscillator? Or what is it? No, some of this stuff is breaking the mold of even the established last 40 years as we continually give that credence the last number of decades in terms of the empirical data as well. So expect the surprises, never overexposed in the market. You guys know that, and it's a pleasure to talk to you. We will be back tomorrow. I'll let you guys go, and let's go get it. Let's go hammer when it's time to hammer. Tight stop losses. If you're consistently booking trades, raise the level of margin, and then and only then. That's just 100 rounds. That's that program 100 rounds. I've seen that work tremendously well, and shout out to all the individuals that has worked well for, and you're booking trades. Nothing can make me more excited. And I know you're booking trades. Congratulations. We'll talk to you guys soon. This is London with Bitcoin Spike and VIP Trader.